Hello and welcome to the CNBC TV 18 Budget Brainstorm. I'm Shereen Bhan and we're coming to you live from the iconic Bombay Stock Exchange. Now, every year, this time around, we talk about the importance of the budget. The budget this year assumes particular significance and particular importance because of several factors. Let me just lay them out for you. This budget comes in the backdrop of the demonetization exercise started on the 8th of November. In the short term, it has been disruptive. In the short term, it has had an impact on demand. Will this budget stimulate growth? Will this budget stimulate private investment and private capex? That's the big question. But that's the domestic story. We also have a global story to contend with. This budget also comes in the backdrop of a new US president. President Trump is now in the White House and executive orders have already been passed by the president. Big hopes as far as the renegotiation of trade deals are concerned. The US has already opted out of the Trans-Pacific Partnership. What will President Trump's policies mean for global trade, specifically for India? Will it be good, bad, or neutral as far as India is concerned? We're seeing a fair amount of volatility, whether it's the currency markets, the implications of that for emerging markets like India, specifically when it comes to talking about inflows of foreign capital into India. So that broadly sets up the context of why this budget is important. One of the key domestic reasons why this budget is extremely important is going to be from an aspect of job creation. My understanding is that the government wants to send out a message that this is going to be a budget that tries and promotes job creation. Remember, even when we had the GDP growing at 8% plus, jobs were short in sight. Labor-intensive sectors likely to be given focus, the rural economy likely to be given focus. Those are the messages that we're picking up from Delhi. But to help us set expectations as far as Budget 2017 are concerned, I have with me some very esteemed corporates who've of course been witness to the budget for several years now. B. Vaidyanathan of Capital First, thank you very much, Vaidya, for joining us here today. Unni Krishnan from Thermax, thank you very much, and we hope to hear from you on the expectations that industry has, and specifically the capital goods sector has from the budget. And also with us, Mr. Umesh Ravankar of Shriram Transport Finance, to really get a sense of what the rural economy perhaps would like to see from this budget. Vaidya, let me start by asking you, every year there are great expectations from this budget. As I pointed out, perhaps this year even more so. What would qualify this as a successful budget to your mind? What would those 3 or 4 items be on your list? If the boxes were to be ticked, this would qualify as a good budget.
Dramatic simplification of the income tax processes and the tax rates. Because over the years, let me say over decades, I think a large number of exceptions and exemptions have come through the budget. If frankly, if they could clean them up, put together a simple tax structure, which in my opinion should be loaded more in favor of the small enterprises. In my opinion, that would be a very successful budget if you could simplify it, reduce it, and keep it going.
Okay, so on that issue of simplification of taxes, and you're absolutely right, the government has made it very clear that as it moves down that roadmap of bringing corporate tax rates down to 25%, it will do away with the exemptions. But then when you start to talk to private industry and you start talking sector specific, industry still wants exemptions to continue. So for instance, as far as the renewable sector is concerned, they have a demand that the incentives that are supposed to lapse in 2017 should continue to 2022. So it is always this challenge for the government that if it has to cut corporate taxes, it also has to take away exemptions. Do you see more than a 1% cut in corporate taxes as we move towards the 25% band?
You know, frankly, I have always been disappointed about industry after industry coming on channels and trying to influence the government, saying that they are the most important sector for the country and how they create jobs, how they create employment. You know, you can talk about the housing sector, you can talk about the solar sector, and everyone says it's too important for the country. I think all of these has biased the system over a period of time. Frankly, if I was a finance minister, not that I am, I'd maybe give a deaf ear to everybody who claims they're important for India and make a structure that's really simple, and that will take away a lot of arbitrage, it will take away a lot of lobbying that is probably going on, and make it, you know, I saw an important statistic that's important to note. Large companies with turnover of over 500 crores, The effective tax rate for them is 23%, and tax rate for small enterprises with turnover less than rupees 1 crore is 29.37% effective tax rate. That tells a story. Large corporates have somehow influenced the system to have a lower tax rate.
So specific focus on SMEs, where you believe that the corporate tax rate should be brought down perhaps even lower. But on the whole, as a headline number, do you believe that at least a 1 to 1.5% cut this time around is likely?
Well, I would give it a low chance, actually.
You don't even see 1%?
I see that, if I were to ask for it, I would say that the small enterprises, maybe 50 million of them who are really outside of the tax net, we will make a big success of it if we could make a really low tax rate for them, say 2%, 3%, and going up to 20%, maybe 20%. If we give that to the small entrepreneur, it's a big achievement, because I'd say elections around the corner, lots of things happening. Cutting the tax rate for the rich sounds too airy-fairy.
Okay, sounds too airy-fairy, and you might be right. Only let me put that same question to you. And as we just heard there from Vaidya, Ashok Wadhwa, who's our budget guest editor on CNBC TV 18, in his note says he believes it's likely to be an anti-rich budget. Aditya Narayan, also a guest editor on CNBC TV 18, believes that it's likely to be a semi-social budget, or perhaps at least a much more populist budget than we've seen in the previous years under this particular regime. What would your expectation be?
I would go along with the overall popular expectation. I would say it is going to be a proper socialistic budget. I won't call it anti-rich. I don't think there is anything anti-rich going to be. Taking on what Vaidya mentioned about, though the association that we belong to, CII, supposedly spoke about an 18% corporate taxation. I represent a company which had been paying over 30% for the past maybe 1 decade tax. So we don't belong to that particular bracket who do take benefit from the governments. But giving away all the benefits given to people, you need to be incubating newer businesses. We'll have to give some kind of an enticement for people to invest in things like renewables, as you mentioned about. If you want money to flow in, you've got to show some carrots for that. So some amount of tax concessions has to continue. Expectation, if you really ask me, I don't have too much of expectation on all of this count, because the finance ministry is under stress in the current year, in my understanding. Last year at the same time, the crude oil prices were at something like maybe late 20s. Yeah. It's virtually into 2. So there is already an expected outflow in foreign currency by almost $37 to $40 billion. And again, you already paraphrased it in terms of the new government going to take over in North America. The ramification of that is going to be major for the industry which is earning dollars for us. So on one side your dollar needs are going up, other side dollar expectations are coming down. So balancing that, I would say it's going to be a tough job for the finance minister. So he should be very cautious and treating a very difficult path to start with. I would say there should be enough and more to increase our dollar earnings. That's the only way we can look at it. So I would say benefit should be given to industry, whether I'm not naming anyone specifically, to go back to the level of exports that we had 2 years back, 350 billion plus, which has come down to 270 right now. Incentives have to be given, because
so export-led incentives is what you're saying?
Absolutely. And in that, specifically to talk about, both Japanese and European competition to India in any sector has got the currency advantages gotten by them, approximately ranging between 21 to 27%. It can't be offset by incentives, but there has got to be some mechanism to support that. Okay. Unless otherwise we boost the export. Domestic, my opinion about capacity build-up or maybe consumption increase is not in the hands of the government. Though many feel that you can manipulate a domestic economy, I'm a believer that nobody can manipulate.
But what is the state as far as the demand environment is concerned today?
Yeah. Most of the non-consumption oriented commodity sectors are hovering around with the capacity utilization of 60 to 65%.
Okay, so you don't need to add capacity then.
And on top of that, the demonetization had some impact on the entire thing in the Q4, which you'll see in the results. And I would say a trickle effect of that is going to be continuing for Q1 also. Part of that may extend up to Q2. So for us to catch back to normalcy, we are talking about 4 to 5 months period of time. So certainly, it's capacity utilization virtually at the level of maybe in 50s at this point of time.
So then do you see a pickup as far as private capex is concerned? Because so far it largely has been driven by government spending on infrastructure. Do you see any signs of a pickup as far as private investment is concerned, which has been elusive so far?
I would be very specific about it. Investment is going to happen in the oil and gas sector in the current year. It is going to be led by the government.
Yeah.
Because there is enough and more money available in the balance sheets of all the oil companies. So they can afford to be, and there is a capacity shortage anticipated. If you commit for, in any case, the Bharat 6 is going to be putting in 60,000 crores rupees on the block in terms of expansions. Second is 3 more refineries going to be having brownfield expansions, which are already underway in way of approval from the government of India. And the so-called Maha refinery, which was announced last year, maybe some seed capitaling for that to be done in the current year. So I would anticipate in the coming year, oil and gas sector is going to have investment decisions taken. Ordering may happen in the second half of the current year. So that's point number 1. Fertilizer, after a long gap, we've seen some amount of improvement. I would believe that coal-based fertilizer, earlier we had naphtha-based in the country happening some time back. So coal to methane to fertilizer and an NPK orientation to fertilizer are the 2 things which I'm expecting from the government also, where I would presume that some action is going to be happening on that area.
I'm not the finance minister. I have to listen.
But I told you not to listen to them. This is a list of exemptions, requirements of such a long
But he's
list.
not necessarily listing out exemptions. He's talking about the sectors that are likely to drive investment, or at least likely to drive capex at this point in time. He's not necessarily asking for exemptions. But on the issue of exemptions, Vaidya, and this is, I just did an interview with the Commerce Minister, and she was very clear that the SME sector in India needs support at this point in time. Now, will that be subvention? Will that be export-led incentives? We don't know. But she was very clear that the SME sector needs some support. Do you agree with that?
Let me put it like this. Supposing for a minute we have a magic wand and we got rid of all exemptions one shot, and we figured out an effective tax rate is still 25%. You can do 2 things with it. One is you could say that, look, I cut all corporate tax rates to 25%, I'm done with it, simple. Other way to do it can be to use the same amount of money and say the small entrepreneurs who are not in the tax net, come on in. It's a tax net, come on in, right? Because these small entrepreneurs, the carpenters, the shopkeepers, the kirana shopkeepers, the chemists, a large number of them just don't pay the taxes because they're dealing in cash. So you tell them...
Not any longer, though. At least the hope is that they won't be dealing in cash for too much
but
longer.
If they were to pay a smaller tax and come to the tax net, grow the tax bed from 3 crores to say 20 crores, we have a big deal to achieve. So if I were there, I'd use the exemption, cut it off, take it away and give it to the small guy. It makes a good story, makes everybody happy in the context of demonetization, and the small guy goes back happy, and that's what we want.
Mr. Revankar, which camp do you belong to, the Vaidya camp or the Unnikrishnan camp?
I certainly support SME camp, mainly because they give maximum employment in the country. Around 80% of the employment comes from SME segment. And as you rightly put it in the beginning, employment generation is the most important job of any government. Maybe budget is the opportunity for everyone to signal what kind of support government is giving for employment generation, whether it is a developed country like US or emerging countries like India, Brazil. Everyone looks for a job creation.
Absolutely.
And whatever makes job, that is to be supported. If SME does it more, SME need to be treated separately. They need to be given separate fund because out of around 29.8, as per the MSME website, ministry website, 29.8 million MSME are there, and out of that 15.4 are in the rural. And they contribute to around 40% of the export, around 45% of the GDP. So many numbers are there.
Absolutely.
So government has to go out of the way to support SME, whether it is export incentive, whether it is special what call land or whatever possible.
Basically just providing a much more conducive atmosphere and environment for them to do business. But if I were to now talk specifics, as I pointed out at the start of the show, job creation is likely to be the single biggest focus as far as this budget is concerned. What that may translate into, whether there'll be more packages, for instance, for labor-intensive sectors like leather, textile and so on and so forth, we don't know. But this is likely to be one of the big themes. The second big theme is likely to be this move towards digitization in the context of demonetization. Yesterday we saw the Chandrababu Naidu-led committee suggest that there should be a tax levy on cash transactions above 50,000 rupees, and this has been a recommendation made by some bankers as well to the government. Do you believe that that is going to be announced in the budget?
Frankly, I'm not so sure. The moment you introduce a tax on withdrawals, on the face of it looks like a good idea, and maybe it is. But it's my considered view that when you have a tax structure like that, then once the cash is taken out by the banks, by the consumers, not by the small entrepreneurs or anybody, they would hesitate to put it back because they're going to pay a tax to take it back. So one serious worry to think about in this suggestion is that will it again lead us back to a cash economy? And it looks good, but you've got to think very hard about the implications, what it might do to the behavior of the people dealing with cash.
Okay.
So I would say actually if you want to promote digitization in the country, which we should, this should be one of the focus of the budget in the theme of what's going on. I would certainly say that India should definitely pick the mode of what Korea did, and it's a fantastic example. They say, look, if you're a merchant and you're putting a machine, then certain amount of tax benefits you get for dealing in, and if you're a consumer and you paid by credit card or a debit card instead of paying by cash, then to the extent that you spend on the card up to certain limits, I knock it off from your income, I give you a tax benefit. So both the consumer and the merchant are incentivized to deal in check or by card rather than by cash. I think that will change the behavior of the system.
And one of the other specific suggestions made by the Naidu panel is that there should be zero MDR, at least as far as government entities are concerned. Do you expect at least forward movement on this recommendation, if not on the former that I just illustrated for you?
Well, a zero of anything is, if you're saying you're dealing with 100% government organizations, like Air India or something like that, then you might do it. But, end of the day,
yeah, how meaningful is it? Because if you don't, it's not.
How meaningful is it? Because government in business is not that much relevant whether you're an MTNL or you're Air India. But if you're talking of a oil company which is largely owned by the government, also held by the minority shareholders, I will ask you the question as to where is that MDR cost going to come from? And therefore it might be an okay as an idea, but I think to let the market forces work on this and figure out how that can be brought down, it will be better. And I must say, by the way, that the MDR structure has stuck in Stone Age time since the last 15 years. It's still the same 1.1% and the same 0.7% for the merchants, about 1.6, 1.7%. This has to change. I think government has to actively intervene to break down this architecture that's going on, an unshakable sort of a MDR structure of the country right now.
Okay, on that note, we are going to take a break. When we return, more animated conversation here on the expectations from the budget with Mr. Vaidyanathan, Mr. Unnikrishnan and Mr. Revankar. Stay on with us. You're watching the Big Budget Brainstorm here, coming to you live from the Bombay Stock Exchange. Back in a moment.